In today's session, we will be working out another journal entry. Let's look at the transactions and the question as well. The question requires us to pass the journal entries for the following transactions in the books of XYZ Limited for March 2020. So what we've understood is that here the name of the business is XYZ Limited, and we are preparing the transactions for March 2020. So we have to prepare the journal entries for this, and we have around 12 journal entries that we have to pass. So let's start working the journal entries one by one. Let me change the view of the camera, and we would be working this question now. Okay, what we've just seen is that we've been asked to prepare the journal entries, and we've been given around 12 journal entries that we have to prepare for. And
Sugu sir,
yes, sir.
please adjust the board, sir. Please, yes. Yes, okay, sir. Okay. Good.
I think this is better now, sir. Okay, thank you, sir.
Please keep right side. Okay.
Thank you, sir.
Okay.
Okay, now when we go back to the question, we see that we are asked to prepare the journal entries for XYZ Limited. So we're preparing the books of accounts for a company by the name XYZ Limited. And remember, the books of accounts that we are preparing here is the journal entries. Okay, we are preparing journals. Also, the transactions have taken place in the year 2020. Now let's look at the transactions one by one. The first transaction is started business with cash. So on March 1st, you're starting a business, and you're starting a business with cash. So started business with cash, rupees 50,000. Now remember, whenever you start a business with cash, the cash that you contribute is referred to as capital. Capital is personal in nature. So let's pass this journal entry. Cash account debited to capital account, and the amount is 50,000. So cash is real, capital is personal. Golden rule for real account is debit what comes in. So here cash is coming in and capital is personal. Golden rule for personal account is debit the receiver, credit the giver. Proprietor is giving capital to the business. We have to write the narration. Being started business with cash. So that's the journal entry. Next, March 2nd, bought furniture for cash, rupees 20,000. So the second transaction is bought furniture for cash, rupees 10,000. Remember, there are two kinds of purchases and sales your business can carry out. Either it could be for cash or it could be for credit. But here it is specified that it is for cash. Also, you're buying an asset. You're not buying goods. Here you're buying an asset. Whenever we deal with purchase and sale of assets, we have to use the asset account directly. So the two accounts that we'll be using here are furniture account debited to cash account. The amounts are 20,000, 20,000. Narration is being bought furniture for cash. Next transaction. Third, bought goods for cash from Matthew, rupees 4,000. So here you're carrying out a purchase. You're carrying out a purchase from a person, Matthew, and And then it is also specified that the transaction is for cash. Okay, so it is specified that the transaction is for cash. So since the transaction is for cash, the name of the person with whom you're carrying out the transaction does not have any relevance. Okay, so here it would be purchase account. Remember, purchase account is real in nature. Golden rule tells you debit what comes in. When you carry out a purchase, goods are coming into your business. Okay, when you carry out a purchase, goods are coming into your business. Okay, so purchase account debited, and since the nature of this purchase is for cash, it will be to cash account, and the amounts are 4,000. The amounts are 4,000. Being cash purchase from Matthew. Okay, so that's that one. Next, let's look at the next transaction. The next transaction tells you bought goods from Matthew, rupees 2,000. Okay, now here, this is very interesting. On 4th, you're buying goods from Matthew. Okay? But here, what is happening is it has been specified that it is a purchase. The name of the person with whom you're carrying out the purchase is also mentioned. However, it is not highlighted that the transaction is for cash. Since it is not highlighted that the transaction is for cash, we know for sure this is a credit transaction. So whenever it's a credit transaction, instead of cash, we would be using the name of the supplier. So here it would be purchase account debited to Matthew account. Okay. Now, what type of account is Matthew account? Matthew account is personal. Golden rule tells you debit what comes in. Debit the receipt. Personal account for golden rule for personal account tells you debit the receiver, credit the giver. Matthew is giving you the goods. So here the amounts are 2,000 and you will be crediting Matthew's account. Okay. So here narration would be being credit purchase from Matthew. Being credit purchase from Matthew. Now let's move on to the next transaction on 5th, March 5th. Transaction on March 5th tells you return goods to Matthew. Okay, what is happening over here? You are returning some goods to Matthew. Now, why are you returning the goods to Matthew? Probably some of the goods that Matthew supplied to you, they may have been of poor quality. They may have not been up to the mark. Okay? They may have been of poor quality and they may have not been up to the mark. So you're returning goods now back to Matthew. So when you're returning goods back to Matthew, you will have to use an account which is called as purchase return account. Whenever you return goods back to the supplier, you will have to use purchase return account. Now, what is meant by purchase return account? It is the account that is used for recording the details of the goods that you have purchased. You're not happy with it. Now you're returning the goods back. So it's something like this. Maybe you bought a brand new laptop on Flipkart, and Flipkart has got 30 days return policy, and then you tried using, you found out that it is damaged. So you're returning the laptop back to Flipkart. Okay, so that is what is referred to as purchase return. So likewise, you took some goods from Matthew, and then you realized that the goods were not up to the mark. Now you're returning the goods back to Matthew. When you return goods to Matthew, remember, Matthew is receiving. Okay? When you return goods back to Matthew, Matthew is receiving. Remember, Matthew account is personal. Golden rule tells you debit the receiver. So Matthew account debited, okay, to purchase return account. Purchase return account is real in nature. Okay, purchase return account is real in nature. Golden rule tells you debit the receiver, so debit what comes in, credit what goes out. Okay? The golden rule for real account tells you debit what comes in, credit what goes out. When you are returning goods back to Matthew, goods are going out. when you return goods back to Matthew, goods are going up. So here you will debit Matthew account and then you will credit purchase return account. We have written the narration and then we are done with that transaction as well. We're done with that transaction as well. Now let's try and work out the sixth transaction. Sold goods to Amit. Sold goods to Amit. Rupees 4,000. Sold goods to Amit, rupees 4,000. So here what is happening is you're selling some goods and you're selling the goods to Amit, and it is not specified whether it's for cash. However, since it is highlighted that you're selling goods to Amit, what will happen is you are under the assumption that it is a credit sale. Okay, you're under the assumption that it is a credit sale. So here how it would be is when you sell goods to Amit, Amit is receiving. So Amit account debited to sales account. Okay. Amit account is personal, debit the receiver. Sales account is real, credit what goes out, and the amount is 4,000. Being credit sale to Amit. The credit sale to Amit. So we've covered 6 transactions. We've got another 6 more to go. The transaction on 7th tells us that sold goods to Amit for cash. So here you're again carrying out a sale. You're carrying out a sale to Amit. However, it is mentioned over here that it is for cash. So whenever you carry out a purchase or a sale for cash, the name of the person with whom you are carrying out the transaction is irrelevant. So here it would be cash account debited to sales account, and the amount is 3,000. When you carry out a sale, cash is coming in, goods are going out. Cash account is being debited, sales account is being credited. Sales account is real in nature, credit what goes out. Now let's move on to the next one. The next transaction tells us that Amit returned goods rupees 300. So here what has happened is you sold some goods to Amit. Amit is not happy with those goods. Now Amit is returning those goods back to you. Okay? So remember, Amit, you sold some goods to Amit. Amit was not happy with the quality. It may have been damaged. Now that Amit is not happy with it, he's returning the goods back to you. Okay? So this is a sales return. Okay? This is sales return. Remember, sales return is again real in nature. Okay? So it is real in nature. So since it's real, golden rule tells you debit what comes in. When Amit returns goods, goods are coming into your business. And Amit is what type of account? Amit is personal account. Okay. Credit the giver. Okay. So if Amit has to return goods to you, he has to give it. Okay. So his account is being credited. I've missed out the narration for transaction on 7th, being cash sales to Amit. Next one is being goods returned by Amit. Next one, March 9th. Okay, March 9th, withdrew cash for personal use 4,500. withdrew cash for personal use 4,500. Remember, the proprietor is taking cash. But for what purpose is he taking cash? He's taking cash for his personal needs. Whenever you take cash for personal need, remember it is drawings. Okay, it is drawings. Now, sometimes the term withdrew may confuse you. Okay? Sometimes the term withdrew may confuse you. That's because in our day-to-day life usage, we say withdrew from ATM, withdrew from bank. Okay? So we have an understanding, or we have a misinterpretation that whenever we talk about withdrew, it means it has to be bank. It is not necessary. Withdraw means to take. Okay? Withdraw means to take, but it does not mean that the transaction is from bank. So withdrew cash for personal use. What that means is the proprietor came to the business in the morning, he opened up the cash box, he took out some cash from there for his personal use. Whenever you take cash for personal use, please remember, drawings is personal account. Drawings is personal account. Golden rule for personal account debit tells you debit the receiver. Okay? So when proprietor withdraws money, proprietor is receiving the money. So drawings account debited. Okay? Now when proprietor withdraws cash, what happens? Cash is going up. Cash is going up. So here, drawings account debited to cash account. Okay. Drawings account debited to cash account. Remember, drawings account is personal, debit the receiver, and when proprietor takes cash, cash is going out from the business. Many times I've seen with this transaction, students getting confused. They have a feeling that withdrew means it is bank. They have a feeling this has to be a bank. It is not necessary. If it is withdrawal from bank, then it has to be specified. Withdrew cash for personal use from bank. That is when you will be using bank account. Let's move on to the next transaction. Paid rent rupees 2,000. Okay, paid rent rupees 2,000. Rent account is nominal. The golden rule for nominal is debit all expenses. When you pay rent, that is an expense for you. So rent account debited, the amount is 2,000. When you pay rent, cash would be going out. So to cash account. Cash account is real. Credit what goes out. Being payment of rent. Now let's move on to the transaction on 11th. Transaction on 11th tells you paid Matthew rupees 1,500. Paid Matthew rupees 1,500. So you had some cash with you and you owed some money to Matthew and you decided to pay that money off. Okay, you decide to pay that money off. So let us look at how do we go about journalizing this particular transaction. This particular transaction, how you would be dealing is Matthew account debited. Now, why Matthew account debited? Because Matthew is personal. Golden rule for personal account is debit the receiver. Okay, so Matthew is receiving, then Matthew's account has to be debited. When you pay Matthew, what is happening to the cash is going out. Cash is going up. So Matthew account debited to cash account. Being cash paid to Matthew. Being cash paid to Matthew. The last transaction, received cash from Amit. Okay, so Amit had to pay you some money and now Amit is making that payment. So that is received cash from Amit. So how do you go about with this? cash account debited. Cash is real, debit what comes in. When Amit pays money, cash would be coming into your business. Cash would be coming into your business. Okay, and Amit account, remember Amit account is personal. Okay, Amit account is personal. Debit the receiver, credit the giver. If you have to receive cash from Amit, Amit has to give. So being cash received from Amit. So with that, we have completed this particular journal entry.